Hey guys, we are at the end of our session. We will be doing chapter 10. This is one of the three chapters for your curriculum Economics for Engineers, subject code HU801, where you have maths. However, this maths we have discussed in chapter 5 also when we were discussing time value of money. But both these problems can be done through time value of money also, or else it can be done without using not using the time value of money also. Capital budgeting mainly has two purposes. What are these two purposes? The first purpose is to make sure that capital are sourced properly. An organization needs capital or fund to run the business. So the first purpose is to make sure that we are getting abundant fund to run a business. The second is we will also have to make sure that the cost of fund or cost of capital raising is not too much, like cost of fund in the sense if you're taking money from the bank, if you're borrowing money from the bank, then you have to pay an interest. That's cost of capital. So we will also have to make sure that the cost of capital is not too high. So these are the basically two main functions of capital budgeting: sourcing of fund and the cost of fund. Then, before I discuss the techniques of capital budgeting, it is also important that you know what are the types of capital. Broadly two: equity capital and debt capital. Equity capital is the owned capital and debt capital is the borrowed capital, which the company is taking for loan, from a bank or any financial institutions. Apart from equity and debt capital, there can be a special type of capitals also, like your debentures, which is also a type of borrowed capital only at the end of the day. So these are your basically types of capital. Equity capital, which is owned capital, mainly the equity share, preference shares. Then you have your borrowed capital, which is like loans, and specialty capital like debentures or any particular capital like venture capitalists, which is investing in your company for a particular project. They are funding it. That can be also like a specialty capital. Moving on to the techniques of capital budgeting. Broadly, there are four for your exam. And why do we get these techniques? This techniques helps you to evaluate a project because you're sourcing fund to invest in this project. So you need to know which project is good to be invested. So that way, these techniques helps you to evaluate the project and decide which project you should go for. The four techniques are payback period, net present value or NPV, average rate of return or ARR, and IRR or internal rate of return. Now, please keep in mind, say for instance, if a project is accepted as per payback period, not necessarily as per net present value also it will be accepted. It can be rejected, and some other project might be also accepted. In the sense, out of those four methods, the results may vary. Fine. In the question, you will be asked in which method to do, and you have to go for that method only, and you will be given two projects. So payback period, we usually calculate payback period finding out what is the amount of cash inflow. Now, in all this method, cash inflow will be playing a very strong role. Cash inflow in the sense the amount of profit or the amount of income that we are getting from a project. Fine. So payback period is like we are finding out what is the cash inflow we are getting, and then we are figuring it out in what is the cash outflow we are getting deducting from it. Like say for instance, the cash outflow means investment. If the investment of the project is 50,000 and per year we are getting 5,000, so which means in 10 years we will be reaching a point where we can overcome the particular expenses of 50,000, the investment. So that's how we calculate payback period, which is mainly for to estimate which project we will go for. If there are two projects, one has a payback period of 10 years, other one is for 15 years, we'll obviously go for the one which gives the lowest payback period. That is about payback period. Then you have